Harsh, and while it's in an exciting space, not that great for those who got in the pre-IPO kind of, pricing.
Well, yes, so the grey market pricing was off, as has been the case in the past as well with an HDB Financial, so you're right there. But it's a duopoly, and not too many duopolies. If you want to play maybe a Zomato, Swiggy, could this be a better one? Well, I'll leave that question open. Offer for sale, 4,000 odd crore, so giving it a market cap of around 16,000 crore. Entire offer for sale, so no fresh issue. The price band is going to be around 760 to 800, even though the sense seems to be that it will be tilted more towards the 800 number, of course. The offer date's open for the next 3 days. Now, let's quickly look at what it does. 2012 is when it was incorporated. It's a SEBI-registered market infra company, acts as a security depository in India. What is it? It's basically a safe house for your securities which you buy and sell on the market. Only 2 depositories in India, CDSL and an NSDL. We'll compare that a bit. It maintains electronic record of allotment, ownership and transfer of securities. That's its essential role. The services it provides is on your screen. Let me also take you through what it makes money through. Annual custody fees from you and me is what it charges, transaction fees to brokers, IPO facilitation fees to companies, banking services, it has a payment bank as well, database management services is the other piece it offers, including a KYC. Let's look at the financials, and that's how it stacks up. An 18% top line growth, around a 23% EBITDA growth is what it's clocked, and a 21% PAT growth over the last 2 years. That's really the journey. Let's look at the balance sheet. That's how the net worth stacks up, 2,000 crores. So it trades at around, or rather will trade at around 8 times at a 16,000 crore market cap. Something to keep in mind. Let's quickly compare both NSDL and CDSL on certain key parameters. The number of issuers, NSDL, are far larger than CDSL. As you can see, the depository is, or the DPs are far smaller than a CDSL, because CDSL is more granular in nature, retailized. And then there are those other parameters, CDSL having more demat accounts as well because it's more granular. Now let me talk about financials. That's how the income number stands at. CDSL makes a better margin, and therefore your profit after tax of CDSL far better than an NSDL compared to total income. EPS stands as you can see. Quickly onto valuations. That's how the price to earnings multiple will stack up. That's the market cap net worth. Let's look at the PE. The trailing 12 months PE. NSDL is 47 times, CDSL is 61 times. 8 times on price to book versus 18 times for CDSL. So substantial discount versus CDSL for the same play, of course, with more institutional participation in customers versus retail for CDSL.
Okay, thank you for that, Harsh. In fact, let me get in Narendra Solanki, Head Fundamental Research Investment Services at Anand Rathi, to talk about NSDL. Deven Choksey also joining us, Managing Director of DRChoksey Investment Managers. Welcome to both of you. We'll start with a quick word of on NSDL specifically, because that's the big one that's opening.
Well, I believe that I think this is a must in the portfolio.
Okay.
Couple of reasons. You already have the market cap growing from 5.5 trillion with a visibility to become 15 trillion in next 10 years to 12 years time from now. So obviously, I think the number of and the value of assets increasing and the number of transactions increasing along with, that is a good sign for any business directionally for the growth. And it's a duopoly anyway. So around 43-44% of the revenue comes from the deposit services. About 50% of the revenue comes from the payment services which they offer through their other companies, payment bank companies. And I think the database company, which is relatively small, I think it's 7-8% kind of a contribution into the revenue. It is also providing, I think, a significant amount of solutions to on the e-governance, KYC and insurance depository related services. So in my viewpoint, I think with this kind of diverse portfolio that you have, including your subsidiaries, I think the business becomes absolutely, I think, a must in the portfolio, because I think this kind of businesses will only give you a chance, I think, when they come into the public market. Fortunately, they have left some money on table for investors, as against, I think, what it was trading at the price in the private market. So in a way, it is a good sign, I think, that the company has given for investors, I think, for long term.
Okay, so Deven Choksey says it's a must-have in your portfolio. So does Narendra Solanki. Deven, by just one word on investors who, I want to say, got trapped in the pre-IPO pricing, in the grey market. Actually, I can't even say grey market because it's not necessarily, illegal. Same thing happened with HDB. There are a lot of investors right now in NSE before the IPO comes in. What is your caution to them?
So I think if you have not bought it for flipping purpose, then I think you don't have to worry about it. You just simply stay invested in this business. And as I was explaining, I think this kind of businesses, I think they provide you the returns over a longer period of time, because I think they grow inherently with the asset class in which they are operating. So certainly I think we believe that I think this is a good opportunity over the next 5 to 10 years as well. So those who have been buying, I think, at a higher price in the pre-IPOs, they may wait. I think they need not immediately panic and sell it out.